Hello and welcome back, folks. I'm joining you live on the heels of GameStop earnings, and I've got my gold chain on here. And part of that reason I've got my gold chain on is because, as it turned out, I did decide to go short GameStop ahead of earnings this afternoon. So the video I made this morning, I was talking about having taken off my position, but I decided that I would actually go short coming into earnings. And this is the position that I had on. I'm going to pull it up on the screen here to check out for us. This is just a little fun. Who knows? You know, the stock's offered lower now. It seems like they really missed earnings pretty badly. As far as I could tell, they were expecting a loss of like $1.52, $1.51, something like that. And they ended up losing $1.39, which is an extreme amount. And usually a company would not miss by that much. But you do have to remember that this is kind of a special situation. And part of the reason that it is a special situation is that not that many analysts really cover the stock, right? It's not like an Apple where you've got all these analysts covering the stock, visiting the company, and all this other stuff. Hold on, I'm just going to post a link to this somewhere so we can see if we can get some more viewers coming in here. See if we can get a party started here. So bear with me as I just post this to some other spots here. But yeah, there's not the analyst coverage on this stock, even though it's in the news a lot. Analysts covering the stock, visiting the company. Even though it's in the news a lot, there's not many analysts that cover the stock. And if you have been following it, you would know that a lot of analysts have said, you know, have price targets that are like way lower than where this is right now. That kind of thing. So it's not as surprising with GameStop as with maybe some other companies that the stock is that the earnings miss was so big, because once again, most analysts that cover this have said the price target of like $30 or something, and just these crazy price targets. And thus, it's a lot more understandable in this stock than like an Apple that earnings would be way off from the prediction, right? So that's kind of where I stand on that one. Anyway, so let's look at what we did today coming in here in the stock. And if I do pull up my Analyze tab, I've got Thinkorswim. I'm sorry, I've got Thinkorswim here. You can see it shows me here versus 163. I'm short 156 deltas. So that's kind of like the equivalent of being short 156 shares of the stock. Thus, goes down $1, you make 156. It goes up $1, you lose 156. And when we look at the stock right now, it's down about $10 on earnings, which is, we don't know if it will stay there, because I don't believe the conference call's like completely gone through yet. And they might come out and say something that's bullish that gets people excited. You can see from the chart here that we bounced off of 160 a little earlier, right after the news came out. And interesting to note that, yeah, earnings did come out pretty soon after the close. I think it was at like between 4 o'clock and 4:10 when the news came out. But a big miss here. And also on the tails of just this kind of trending lower. If we do go to like a 20-day chart, we can see from this recent high of 252, we've really just kind of gone straight down until like a couple days ago when we bounced a little bit. It will be interesting to see if we get through this 159 level here. If we do back out the charts, and I do like to back out the charts anytime we're looking at like a bigger move, we can see that you know, it was down in this 150s area. This is a 6-month chart, so about 6 months ago it was down in this area. Let's go to a year chart, and you can see really, this is the whole story of GameStop since we started out a year ago, $12. Then we got that huge move up, and as I've said before, this move up here to 483 and then back down, that was a big short squeeze, but not that surprising. The surprising and the unique part, and the part that will be studied about this stock in business schools and whatnot from now through eternity, is the fact that after the short squeeze, where there was some shadiness in how they were allowed this to be short so many shares. They were saying the short interest was like 130% or something. How they allowed two people to borrow the same shares to short them is still kind of being investigated. But after the short squeeze, most positions were unwound, so that we had a short interest coming into this big first spike of negative of 130%, which doesn't even make that much sense. And then, but this second move up and this third subsequent move up are really the unique things about this stock. How once this short squeeze was unwound by people covered their shorts. And we know that because we do get reports over time about the short interest, usually with stocks. And this is a point I want to make maybe for some of the newer people out there. People will come in every day and say, oh, so-and-so has this, that, or the other position. And the reality is we don't know in real time what positions people have. The only way we can tell what a Citadel or some particular hedge fund has, and Citadel is maybe not a great example because they represent customer money and separate accounts also, and they're also a market maker firm. But a big hedge fund, they will publish, or they will have to file quarterly with the SEC about their positions. And so we won't find out until the end of the quarter what their positions were or how they changed them many times. So when someone comes out someday and says, oh, well, Melvin has this exact position, or Carl Icahn is short this one, or that's mostly speculation, because traders will not tell you their position unless they're forced to, right? No trader wants to tip their hand. It's like somebody in a cards game showing you their hand of cards. People don't know what positions are, and certainly there were plenty of professionals who were long GameStop on these up moves, right? It's not like everybody who was long was like the pioneers and the hard-fighting true Americans, individuals, and everybody was short was like the evil Big Brother government, 1984, George Orwell. No, there's people on both sides of this trade in every which way. There was hedge funds that were long for a little bit, short for a little bit, started long and went short, started short, went long, and everything in between. But as I was saying before, this second move up is something that is pretty amazing, that this stock was able to go from $12, have this huge squeeze, thousands of percent squeeze, and then come back down. That's happened many times when there was a short squeeze and it came back down. The really surprising part is when you get this second move up and it stays up, right? And we've stayed above 200 for quite some time now. And meanwhile, the so-called fundamentals of this company, they've improved in that the debt of this company was largely wiped out. The huge advantage there's many, many advantages to having your stock go way up in value. One of it is that it makes, your shareholders money, and so you have a lot of people in your camp. It also makes anybody who you've issued stock to money. So if you had, for example, the board of the company, maybe employees that were there since the IPO, other people who are part of maybe the company's 401k program that issues stock, those people all make money. It puts the stock in the news with a positive twist, so that allows you to attract better people if you want to hire new people. So GameStop, because of this big up move, had many positive things happen. And I'm not going to sit here and say like, oh, it's just all negative. Not at all. They were able to wipe out their debt, which is huge. They floated some more shares, and usually a company has to be very careful when they float shares. When they sell extra shares, many times it scares the market, and the market brings the price of the stock down. When you issue more shares, you're diluting the stock price, right? There's more people out there that have the shares that can sell them. And many times just the announcement of issuing a secondary offering spooks the market, and it goes straight down. But in this case, the stock was not spooked at all by a secondary offering, and in fact moved higher soon after the announcement and during that time. And I believe there was some data that the average prices that the stock was sold at were around this area right here that we're in now, the 160 area. So anyways, just to move on with our story here, then we got another up move, and the loyal fan base of this stock has been remarkable and has held the price high for quite some time. Now, another issue though that I do want to point out is that this is pretty much the whole history of the stock for the majority of people who own it right now, right? So many people who own the stock had no position before a year ago, and which is hilarious because if you look at the post on StockTwits or otherwise, or in Reddit, they are talking about old school traders and the OGs, and we've been at this for years. They make it sound like they've owned GameStop for the last 40 years, and they're saying, my grandchildren will inherit this. I'm never selling. I'm taking it to the grave. Meanwhile, maybe you should wait to having owned a stock more than a year before you start talking about taking it to the grave, right? Maybe try holding it for a year first, 2 years, 3 years before you start talking about taking it to the grave and see what happens. People are so proud of the fact that they're saying they're stubborn in their position. I'm going to hold on to my position. I'm long it. I'm going to hold on to it no matter what. And anybody who's been trading for a while knows that you're going to be wrong as a trader often. And when you're wrong, you got to swallow your pride, move on. I was watching that. I don't know if you guys have checked out that new show, Ted Lasso. What a great show. But it's about this guy who comes from the United States to coach a British Premier League soccer team. And he gives advice to one of his players at one point and says, have the memory of a goldfish. A goldfish only remembers 10 or 15 seconds. And thus everything is new all the time, and you don't hold grudges, and you aren't stuck to old beliefs. I think that's a great way to be as a trader. Right now, I happen to be short GameStop, but that doesn't mean I'm a bear and I'm just a short forever, and that's what defines me in life. Tomorrow, I could be a bull. I was long GameStop coming in yesterday. So I was a bull yesterday, but and some people who are watching this now even probably are like, you're a trader if you were long and then you go short. That's being a trader to all the other bulls or something like that. This trading is it's not a team sport really. It's about you making money. And yes, it can be fun to all root for the same thing, but you don't want to get stuck in a situation where and have no flexibility to admit you were wrong, because we're all going to be wrong in the trading world. If you're trading long enough, you're going to be wrong, and you're going to be wrong many times. And being able to adjust, switch gears, accept that this position isn't working out, and to get out of it is going to be key to your longevity as a trader. Those who have been trading for 1 year, even if you've done well, let's say you bought Bitcoin last year, you made a ton of money being long Bitcoin, or you bought GameStop and it went up. Buying a stock and having it go up and holding on to it, in the end, that doesn't make you a great trader, right? You had one good trade and you held on to it, and eventually maybe you get out of it. And that's great. Congratulations. But your longevity as a trader will be determined over time at how you adjust to the changing market conditions. So somebody saying, oh, well, I bought this stock and it went up, and claiming to be a genius, well, you were smart to buy that stock for sure. Great job. But there's more to trading than just buying something and holding on to it. That's more of an investing thing than a trading thing. And semantics is semantics. Okay, if you make $1 zillion, it doesn't matter if someone calls you a trader or an investor, of course. All right, let's get back to GameStop. So stock's trading 163 right now. The recent low was 159. We'll see what happens. I'm not sure if the conference call is still going on now. I'm not one to listen to conference calls. Even when I was a market maker in stocks, I think I probably listened to less than 10 stock conference calls in my life. The reason being that I don't know how people are going to react to a conference call, and I might think something sounds really great, but the market might sell it off. It's kind of like listening to a weather forecast. The weatherman might be right, but it might, or the weatherman might be wrong. It can still rain on you, even if the weatherman says it's going to be sunny today. So we'll see what happens. It's good news for the fact that I'm short, that the stock's down $10 right now, but we'll see where it opens tomorrow. It wouldn't be surprised at all if this opens up, right? That's the nature of the beast with the stock market. You can have awful earnings, which this appears to have been, and the stock could still go up, right? That's just the way the market is. So I'm excited now that I came out short the stock, and it appears to be down $10 after the close. But, until a position is actually closed, it doesn't mean anything, right? Until I actually take off the short at a certain price, it doesn't mean anything. And I don't have the ability right now to take the short off because options are not open, and I don't have the excess money in my account to actually just buy 150 shares right now against my position, nor would I want to buy 150 shares against my position because, it could open even lower. If I had more, I would like to have more buying power because now being short 150 deltas, I wouldn't mind buying 50 shares to kind of lock something in here, right? That might be nice, but I just don't have the liquidity to do that right now. Anyway, so join the party. It's kind of exciting to go out short of stock and earnings, and it seems to be down. So that's neat. We'll see what happens coming tomorrow. I was thinking about, just to switch gears for a second, I was thinking about getting short this DWAC stock, and that would have been a huge mistake, up $14 today. Let's take a look quickly at that one. DWAC, I know that the last time it spiked up, which was last Friday after the close, it was because they had announced that they had reached one of their fundraising goals. And once again, that goes back to what I was talking about before. When you have a stock that the price goes way up like this, it makes fundraising a lot easier, right? Because you can point to that for people and say, look, the market loves this thing. You should invest in it. And it's easier to get loans. It's easier to get more investors, etc. I'm suspecting that the news, let's see if we can see the news here. Now, the way I'm pulling up news on Thinkorswim here is I'm going to the right side of my screen where it says N, and I'm clicking on that. Now, many people associate the stock, of course, with the former president, but be careful about doing that sort of thing because the stock is a different entity than the president, and it is possible to love the president and hate the stock, or love the stock and hate the president, or vice versa. And I don't mean like in an emotional way. I mean, when I say hate, I mean be bullish or be bearish. To be bearish, you could be bearish on the stock and still be a fan of the former president, and vice versa. They aren't one and the same. I think sometimes people get confused over this sort of thing. I've seen several posts online saying, the former president, everything he touched went to gold, so buy this stock because it's definitely going to do well. I would recommend digging a little bit deeper than that before you invest in a stock. So there we go. Right now it is, what time is it? It is almost 5 p.m. Eastern time. There are 3 more hours before after hours closes, and then after hours reopens at 4 in the morning. It will be interesting to see where GameStop reopens tomorrow morning. Right now it looks good for the shorts, down $10 on looks like bad earnings, but we'll have to wait and see what happens. And here, let's see this story. GameStop quarter 3 earnings takeaways. Revenue up 29% year over year, which that in a normal year that would sound really good. But the thing is, we're a post-COVID, so pretty much every company is going to have better revenues because last year we were pretty much shut down. So year over year returns are not as meaningful right now just because we're coming out of COVID like that. So it says GameStop. So on the positive side, GameStop ramped up its inventory, which was $1.14 billion at the end of the third quarter, compared with $861 million. So inventory is up, but does that mean they just have more stuff sitting on the shelves? Because what we care about is what inventory they sell, right? Okay. GameStop ended the third quarter with $1.4 billion in cash and only $46 million in unsecured loans. So that's really great news. They've got a ton of $1.4 billion in cash and only $46 million in loans. So that is great news for the company. That's a bullish piece of information. In a 10-Q filing, GameStop said it was issued a subpoena by the SEC. On August 25th, the SEC issued a subpoena calling for additional documents as a follow-up to the initial request. Now, don't be scared by when they say they were subpoenaed by the SEC, because a lot of times that's just standard stuff and it's not meaningful at all. So I wouldn't take a lot of stock in them being subpoenaed by the SEC. It's funny, they'll come on the news feed all the time, like company, it'll say like some law firm starts class action suit against XYZ stock. And a lot of times that's completely meaningless. You don't know the particulars of the case, and anybody can sue anybody. It doesn't mean that the case has merit. So SEC subpoena, I would not be concerned about. And it's funny because in this earnings release from, who's this from? Benzinga, they don't talk about the fact that it doesn't talk all about the fact that they completely missed earnings terribly. This is all just good news. There's only good news in this press release, and it seems kind of irresponsible of this media press company to only tell the good news, right? I think these guys are catering to the longs in this, but GME shares up 840% year to date. Third quarter revenues beat street consensus for the third straight quarter. So the revenue beat the consensus, right? Revenue is $1.28 billion versus $1.18 billion. However, their earnings were way less, right? So something bad happened. Let's take a look at this news story, because why would you make if you're supposed to be an independent journalism site like Benzinga, why would you just only put positive stuff in this report? It's just going to confuse people. They see, all this good news, the stock must be up, and then they see, it's way down. At least this story here, another story says the actual meat of this whole thing, which is that they had a loss of $139 per share when it was forecast they would only lose 52 cents. So 52 cents was the forecast. They actually lost $139. That's a lot. That's a big miss. And that should be the headline of a news story, not that these other smaller positive things, especially when the stock's way down. If you're a news service, you should be trying to explain to the public, why is the stock way down right now? Instead of just giving good news, being like, everything's great with this company. I have no inkling why the stock would be lower. Anyways, I will stop babbling. We'll see what happens. Like I said, stranger things have happened. Then you wake up in the morning and this is actually up. But as it looks now, it looks like the company missed pretty badly and the stock's down. If we try to look at the volume that's been trading lately, we can do that. Look at the volume after hours. So if I go to the 15-minute chart here, I can see, in this 15 minutes, I guess it's on my other computer. Let me see if I can fix this. But the volume is not that high. Let me just, the spoiler here, the volume is not that high right now. So, this sell off after the close is not super meaningful because it's not on much volume. So we're going to have to wait and see where this opens. I know that's a long time from now, but you're going to have to wait until 9:30 tomorrow morning and see where this opens to actually see the whole story. And I will be watching it closely with you. Anyway, thanks for tuning into this special edition of the Short Vol Show live when we checked out GameStop and its earnings miss. Best of luck at trading to all of you, and I will see you in the next show. Thank you so much for watching, and thank you so much for your support.
You're watching Famous.